Dominique Moerenhout, you are CEO of EPRA. Thank you for joining us on BiTV.
Thanks for inviting me today.
Uh, 2023 was a very tumultuous year for financial markets in general, real estate also, and listed real estate in particular. What do you take away from this 2023 year that had a lot of challenges for listed real estate companies?
Yeah, so first of all, 2023 has been far better than what we experienced in 2022. Let's not forget, if I look at our FTSE EPRA Nareit Developed Europe Index, 2022 was a disaster, minus 37% total return in the year, which was completely unjustified, creating a big discrepancy between share prices and operational performance. 2023 was better from that point of view. So our index is back in positive territory for the full year. For all the subsectors in Europe, the total return of our index achieved a 17.4%, with all subsectors delivering a positive return along the year, except for the healthcare sector. But we were very pleased to see the lodging and hotel sector being back in the market, the retail sector, the residential sector, and the industrial sector as well. So from that point of view, 2023 was a better year than 2022, but we have to remain conscious of the current challenges of the market.
All right. That's also as we end the year and now start 2024, we are entering what some analysts call for a stabilization of the interest rate environment after a year of hikes that has changed a lot on the real estate market. How do you see this new rate environment, this new market environment, affecting the listed real estate sector at the moment in Europe?
First of all, I would say everybody is expecting two things on the market. First of all, as you correctly mentioned, is a stabilization of the interest rates. We are expecting strong messages from the ECB, expecting a first, a second, and a third cut in the year. Hopefully, that would be great. I think the Fed did already announce that for the US, but let's hope, I would say, we might experience the same here in Europe. So first of all, a stabilization and the getting of the interest rates and getting the interest rates at the level where it should be for the market. That's the first thing. And the second thing, which will also be a trigger for a full recovery on the market, will be to get clarity and stabilization on valuations. We see on the listed sector, so the bulk of the evaluation impact is already, I would say, implied in the stock price today, but the private real estate market still has, I would say, to absorb the loss in valuation probably in 2024. As soon as we get clarity on interest rates evolution and valuation, I think it will be a strong signal for the markets to recover.
Okay, because as we enter 2024, you mentioned that 2023 was a better year than the one before. Will 2024 be even further on the recovery road? Is 2024 the year of the rebound for the listed real estate sector in Europe?
We hope so, but I think we have to be, I would say, cautiously optimistic for the time being, taking into account the environment where the sector is evolving for the time being. When I went to Expo Real in October last year, the main sentence from Expo was stay alive until 2025. I had the great opportunity to speak with a lot of listed REIT managers, particularly the guys based in the US in November, December last year, and they are much more optimistic for 2024. They do hope the sector will recover in the second half of the year. Who will be true? I hope the latter, not the former. And I think, yeah, signals are good. I would say we have good signals on the market. If I look at the listed sector across Europe, as I mentioned already earlier, so there is a discrepancy between the share price and the operation performance. Now the discount to the net asset value, which was 6 months ago 45% discount, today in Europe on average we had 28%. So the sector already recovered. And you can see that in positive performance in 2023. But also on the other side, I would say the balance sheet and the debt structure of the listed sector is very healthy, which also allows the sector to be very resilient in the current interest rate environment and the current or the past inflation environment. So yes, some signals are good, but let's not be too optimistic. And I really hope that 2024 will again deliver a positive message to the market, that the markets will start to recover. But I think the real recovery will probably be in 2025. But we remain optimistic, but cautiously optimistic.
Thank you very much, Dominique Moerenhout, for this insight today in person in Paris. Thank you all also for being with us, and we'll see you soon on BiTV.